Good evening, everybody. I welcome you all on behalf of NISM, and I'm happy to introduce you to today's speaker, Mr. Bihali Lal Diora, for this enlightening webinar as we explore the world of alternative investment funds and unlock the door to diverse and rewarding career opportunities in this dynamic financial sector. So, Mr. Bihari Lal Diora, he's a director at Abacus Asset Management LLP, an India-focused asset management company. His investment expertise spans a broad array of asset classes, including equities, fixed income, commodities, etc. Prior to joining Abacus, Mr. Diora was managing corporate, family office, and university clients. He began his career as a financial analyst at leading financial service firms like Credit Suisse and Fidelity Investments. Mr. Diora holds a master's degree in commerce from Veer Narmad South Gujarat University. He's a top-ranking chartered accountant, a CFA charter holder, and a certified financial planner. Mr. Diora serves as a director on the board of CFA Society India, and he's a visiting faculty member for an advanced finance program. We welcome you, sir, and over
Thank
to
you.
you, sir.
Thank you so much, Rajlakshmi, for that kind introduction. Good morning, good afternoon, and good evening to our students or audience joining from across the world for this webinar on careers in alternative investment fund in India. So what we have done is we have divided the webinar into two different sessions. So I think for the first maybe about 35-40 minutes, we will have some slides presentation on overview of the industry, career opportunities, salary scales, and some of those. And then I think we'll talk a little bit about what certifications are available within NISM for achieving some of those skill sets. And then we'll take up question and answers towards the end of the session. At any point in time, if you have any question and answer, please, you can type it in the Q&A box and we will cover up during our Q&A session. With that, let's get kick-started. So to begin with, I think one thing which you will be commonly hearing across, newspapers or across places is that India is now the 5th largest economy in the world, which about almost $3.6 trillion in terms of economy size. And that is poised to get double in next 8 to 10 years, right? With the right government, it can happen in 6 to 8 years. With not so right government, it can happen in 8 to 10 years. One thing which is very clear, that India grows because of the entrepreneurs despite the government. And you will see that the first $1 trillion we had achieved in about 58 years. The second trillion was achieved in about 7 years, and the third trillion was achieved in about 6 years. So what we have achieved in the first 75 years of our first 75 years of our independence, we are poised to achieve similar wealth generation in next 8 to 10 years, right? And that has vast implications on financial services. That has vast implication on industry as a whole. The Indian asset management industry. So typically it is measured with mutual funds. So if you look overall, if you include others, which is PMS and AIF, then it is almost double the size of this. But on an average, mutual funds are about $450 billion, with a growth rate of about almost 15 to 16% over last 2 decades, right? And they're expected to go almost 3 times in next 5 to 7 years based on AMFI forecast, right? Where does that 3 to 5 5 to 7 years projections come from? One of the factors you will know that in India is a very, very concentrated sort of AMC market. So about 60 to 70% AUM is with top 5 AMCs. Top 10 AMCs would be about 80 to 90% of AUM. But this is still between 12 and 16% of GDP, right? So as the financialization of saving, if you were to consider, the mutual fund AUM divided by if you do GDP, that's still between 12 and 16%. Whereas the global average, if you see, is close to about 60, 70%. So if you are doubling up the GDP, even if you do nothing, the percentage or the AUM of the mutual fund industry still will get double. If we increase the penetration and be closer to the world average, then obviously the numbers go far higher than where we are right now. So one thing is very clear, India is poised for growth in next 8 to 10 years. Now, the second big thing which is happening in India is that the HNI population is growing rapidly. So if you look at the number of Indians who owns assets over 1,000 crores, now there is no definition of HNI per se, but what I've taken is from IBAF data, and you'll find out that the year-over-year growth on people who are, owning 1,000 crore asset is humongous. Back when, and we have last 10 years data, and if you look at, years, there have been growth, as high as 82% and at as low as about 10%. But that number is growing faster and faster. And as that number grows, the wealth creation or the wealth investment obviously grows from faster. Now, when you have a lot of these HNI population coming in, obviously they need some sort of a differentiated product. They need, things which are aligned to their financial goals. And that's where I think the role of AIF industry comes in. Now, a little bit about the public market space of India. Obviously, AIFs can invest into listed as well as unlisted. But from a public companies in India, you will find that India has close to about 6,800 companies which are listed on both NSE and BSE. And that is one of the highest in the world in terms of number of companies listed. We're not talking about the market cap, we're purely talking about the number. And the number has remained consistent over a long period of time, almost like last 10, 15 years. You'll see the number is fairly similar, right? At the same time, you will find that the, Indian equities, and if you look at the investable universe, which is, market cap of 500 crore to maybe about 40,000 crore, which is what we call the mid-market, sector, you'll find that from 60 million to $5 billion, almost 45% companies don't have a single broker. Almost 12% companies have only one broker, right? And there are only like 19% companies which have more than 10 brokers, which is 198 companies, which predominantly will be the BSE 200. So beyond BSE 200 or NSE 200, you will find the coverage is very, very thin, right? Now, with this kind of market, you obviously have a large uncovered space for investors. And that is where, PMS and AIF and, structures like these or managers like these will come in, right? To find out those uncovered opportunities which nobody is covering or which the large mutual fund houses cannot buy, where the HNI risk profile and, the fund risk profile is aligned. Now, out of those 6,000 companies, you will also find that we are very, very diversified. You will find that we are one of the markets which is diversified in almost all the sectors, unlike, let's say, a Brazil, which is more commodity, unlike, say, Middle East, which is more oil, unlike, some other countries. So you'll find that we are across, whether it is financials, whether consumer discretionary, whether industrial. So economy is growing, assets are growing, the number of investors are growing, market is still, under-penetrated or under sort of covered from that perspective. And that leads to a new normal for asset management companies in India. And the new normal is essentially that your financialization of saving is growing, your demonetization happened, your GST is kind of bringing more and more collection. People are getting more literate. I mean, 5 years ago or 7 years ago, people had to still run a campaign of mutual fund sahi hai, but now you don't have to run that campaign. Over time, obviously, mutual funds being a very, very retail space, the regulations have been increasing, whether it is stock categorization, whether it is size of scheme, whether it is type of scheme, it is making it difficult for managers to beat index. So if right now, the mutual funds only have one scheme for a particular category. So if you're a mid-cap fund or a small-cap fund, you can only have one scheme of that. And with that, you will find that there are mid-cap and small-cap funds which are as big as 20 to 30,000 crore. Now, if you have to invest 30,000 crore, and even if you identify an idea, for investing 1% of your corpus, you need 300 crore worth of liquidity. And assuming you won't go below, 5% of that company, you still need like a company which is as high as 6,000, 7,000 crore, market cap. And that becomes very difficult for mutual funds. And hence, mutual funds have vacated that space, the undercovered space which you're talking about. Second, mutual funds are largely bank-driven, large corporate houses-driven. So the owner-manager model is not there, unlike US markets, developed market, where, the manager or the fund manager itself is the owner of the company. That model has not evolved, which means the skin in the game is not there. So most successful managers, essentially similar to US, are now setting up their niche boutique shops, they are kind of becoming entrepreneurs in search of alpha over there. HNI population I already talked about. So obviously they will look for customized, alternate products. So if you invest 500 rupees in mutual fund or you invest 500 crores in mutual fund, your expense ratio is going to same. Your attention to or the time from fund management is almost virtually zero from that perspective. And with these kind of factors in place, there is a new normal of AMCs which is emerging, which is alternative investment fund. So why is alternative investment fund a preferred vehicle, or what is alternative investment vehicle, right? So alternative investment vehicle is obviously a pooled vehicle similar to a mutual fund. The only difference being, or one of the differences being, that the minimum ticket size here for investors to invest is close to about 1 crore rupees. Whereas PMS, it will be about 50 lakhs, and mutual funds, it will be almost negligible, of as low as 100 rupees to that extent, right? So it obviously requires a higher net worth individual to access it. But one, it gives you access to a variety of managers, whether it is listed, unlisted, long short, PE, VC, etc. That optionality is not available in mutual funds. So some sort of differentiation is over there. It's a niche product. It's not available for masses. Each scheme can only take up to 1,000 investors. To that extent, there is a sense of inclusion, a sense of club out there, which is there. It has the concept of dog fooding or manager skin in the game, which means, manager also invests their own money along with other investors, which is kind of missing within the MF space. Now, obviously, of late, SEBI has made a regulation that 20% of fund manager salary has to get invested in the AMC itself. But that obviously is more of a regulatory mandate and doesn't solve much purpose from that perspective. Similar to a mutual fund, it also has a very transparent fee structure. And more importantly, it allows you to align your incentive structure with the investor, which means the performance sharing with watermark hurdle rates is available. And if the investor makes money, you make money. It has operational efficiencies like pooling of assets, NAV-based investing, which is similar to mutual fund and which is better than PMS. So in kind of, best of both worlds, you get features of mutual fund, you get features of PMS, and what you end up making is an alternative investment fund, which becomes a preferred choice for majority of your HNI investors / accredited investors. Now, on your screen, what you see is a typical life cycle of an AIF. There are three categories which are possible: Category 1, Category 2, Category 3. These are essentially the licenses. So when you apply for a license within a AIF industry, you have to apply in one of those three categories. Category 1 essentially includes your angel funds, your venture capital funds, your SME funds, social venture funds, infrastructure funds. Category 2 includes, a mix of both listed and unlisted. So primarily, you have to do unlisted equity, which means, at least 51% or more of your equity has to be unlisted, and the remaining could be listed from that perspective. And category 3 is where you can do 100% listed or 100% unlisted security from that perspective. So category 2 is the kind of most famous category because it allows you flexibility of both worlds. Whether you want to do equity, whether you want to do debt, whether you want to do real estate, category 2 is what people are mostly doing, right? Public market sort of equity or public market funds or public market managers have mostly set up category 3 because essentially it allows for you to take a little bit of leverage, and also it allows you to invest majority of the time in listed markets from that perspective. So setting up the fund, typically takes about 3 to 6 months by getting them the licenses, etc. Once you set up the fund, within next 6 to 12 months, you have to announce the first closing of the fund. Post the first closing, essentially your final closing is announced, and post final closing, the term of the fund starts. The term of the fund, the basis recent regulation starts from the day of the first closing itself. But on an average, you will find that these are close-ended funds. And close-ended funds have a time horizon. Unlike mutual fund, which is an infinite product, AIFs would have a term which is like maybe between 3.5 to 5.5 years or those. So you are giving money with a definite time period post which you can exit without any exit load. And there is some sort of extension allowed in fund for up to 2 years with that perspective. These features are fairly common. Category 1, you will find the duration is a little bit higher than the category 3. So category 2 being private equity, the duration will be between 7 and 9 years. And category 1 being very, very small companies, the duration would be between 9 and 12 years of term from that perspective. All the three funds are close-ended, barring category 3, where an open-ended fund is also allowed. This is the data from Barclays Hedge. This, what I've given you, is the global assets, on hedge fund industry, AUM, which is about $5 trillion, which is expected, or which has already happened, in 2023. The global number of hedge funds is about 10,000, and the global number of alternative managers is about 28,000. So the industry is still very, very small. The industry obviously is growing as we talk from that standpoint. But the assets growth over maybe last 2 decades, essentially maybe 1.5 decades, essentially post GFC, the global financial crisis, you will find is on an upward trajectory to that extent. So people are taking more and more interest in that industry. So the industry is barely 25, 26 years old, but the amount of assets which are flowing in this are massive from that perspective. Back home in India, if you see, I mean, the AIF regulation only came in 2012. So I've not given you 2012 data, but I've given you 2017 to 2023, which is last maybe 5-6 years of data. And what you will see is that, you will see three numbers, which is commitments raised, fund raised, and investments made. And what you will find is that the industry is grown almost 10x in last 6 years in terms of commitments, in terms of fund raised, in terms of investment made. So right now, the investment made are close to about 350,000 crores. The commitment rates is almost 850,000 crores, right? And that's a huge, huge growth, which is happening, which is unseen, which is not happened in any other industry than what you are seeing right now. So they have a huge potential in terms of commitments. They have huge potential with respect to the money which they have raised or they are raising. So you'll see that 2017, the number was about 84,000 crores. 2023, that number is 840,000 crores. And that kind of growth will lead to obviously wealth building, jobs, careers, and also, will require a lot of skill building from that perspective. These are the breakouts in terms of category 1, 2, and 3. You will find the numbers on each of these categories, and you will find that category 1, you see, is about 58,000 crore. Out of the 833,000 crore, which is as on March 2023, majority of the money, which is 7 lakh crores or 693,000, is in category 2. Like I said, the category 2 allows you to basically do both listed and unlisted, and hence the majority of the thrust is on category 2, where institutional investors or other investors are investing. And the numbers are visible. Almost 7 lakh crores out of 833,000 crore is in that category. So about 80-85% numbers are in that category. So that's the place to sort of work for. From an opportunity perspective, there are multiple parties which are involved within the AIF structure. You will find the fund structure. You'll find GPs, which are general partners, which are essentially contributing capital. So LPs are contributing capital, GPs are the managers. So the LPs includes your pension funds, sovereign wealth funds, wealthy individuals, endowment, foundations, fund of funds, etc. You will have essentially the GPs who are managing, LPs are providing capital. Then you obviously are investing into physical assets, infrastructure, real estate, derivatives, etc., etc. And then you have service providers which are out there, including helping you out, the trustee, the custodian, the merchant bankers, the valuation guys, and so on and so forth from that standpoint. This is a calculation which is a bit old, but essentially it gives you a perspective on what number of people we are looking at in the industry. So what I've done is I've assumed it on 2018 numbers, largely because 2023 numbers are just double of what we have assumed. There were about 519 odd licenses back in February 19. Each license can have more than one scheme. We have assumed an average of 2 schemes, which total comes out to be about 1,000 odd schemes out there. On an average per fund or per scheme, you are talking about 7 odd employees. So the total job market we assumed is between 519 into 7 is about 3,600 people. On top of that, you have, the top 20 distributors. The league table is about 2,400. The fund accounting per fund, you need about 2 people. That's about another 1,000 people. The RTA agent includes another 250 people. The lawyers, custodian, trustees, another 280 people. So total industry side, we had estimated for a 500 odd funds was about 7,600. Now, this doesn't include obviously the FPIs, which invest out of India in a similar kind of in the foreign venture capital investments and the fact so on and so forth. That number put together was about 26,000 back in that point in time. Now, average, if you calculate, the more the assets increase, the more the number of people you would be required to sort of manage. The number of estimated kind of funds or licenses, from 519 has probably grown to about 1,200 odd or 1,300 odd, funds. The number of FPIs has grown from about 9,400 to about 12,500 FPIs. So number has massively increased from a pool estimate, and the number of functions have increased. So back in, I think those days, you didn't have a valuation required for some of these things. You didn't want it to have, merchant banker requirement. You didn't have TPM audit. You didn't have cyber audit. And all those things have added and only increased the scope as well as job opportunities with respect to the AIF industry. From a competency standpoint, obviously you need some sort of data gathering, research, competency. You need analytical or analysis of the data which is out there in order to build an investment case. Financial modeling is definitely required. Writing of reports is required. Making presentations. Sector business evaluation, whether you do SWOT, whether you do camel analysis, whatever kind of analysis you want to do is required. Knowledge of markets, industry, economy, understanding trading pattern, functioning, geopolitical aspects. So right now, obviously, there's a war going on between Israel and its neighboring countries, and you need to know the impact. I mean, a couple of years ago, there was a war between Russia and Ukraine, which is I think still going. You require some of those. So there are, accounting skill, there are analytical skill, there are technological expertise, there are written verbal communications, there are finance skill sets in terms of valuation, there are strategy skill sets largely on operation consulting strategy, largely for category 1, 2, because they invest in unlisted assets, which requires more consulting than ever. And then obviously people management is required, whether you want to do co-investment, whether you want to do reference checks, whether you want to do present your ideas, whether you want to take individual advice. Your network is what you require at those points in time. So the list of competencies looks very familiar with what you are doing in other research jobs, and hence the skill sets is very much fungible. If you are already working in research on any of the public side or otherwise, or for a family office, you can easily make a switch within this industry from that standpoint. This, what I've tried to do is I've tried to kind of, break out the roles between the, alternative investment fund. So be it a portfolio manager, be it a director, head of research, be it a product development, trader, senior analyst, associate. And we have tried to find out what kind of roles, what hard skills are required, what soft skills are required, whether they are required at a high scale, whether they're required at a medium scale or a low scale. And you will find out that as the, role becomes higher and bigger and senior, the number of soft skills required are much, much higher than the number of other skills. You'll find that critical thinking, decision-making, people management, creativity, negotiation, verbal communication are very, very high on, the first 3 roles than the last 3 roles. The last 3 roles are obviously more individual contribution, kind of a role than the first 3, which requires more team management, more other skills, more from that perspective. So at a portfolio manager level, obviously he understands the quantitative and modeling, but this is not a showstopper for him because someone else will do a modeling for him. Those 3 skills will be required for a trader, analyst, or a associate level in that parlance. Typically, career path on a category 3, AIF, you will have some sort of director/head of research. You will have a compliance function. You will have analysts, senior analysts. You will have product teams, which are essentially working with the distributors, product development. You will have associates, which are assisting analysts with that aspect. And you will have trader, which will essentially help you with the trading aspect of it. So the profiles are very common. I mean, they can be in, whether AIF category 3 or a public listed fund with that aspect. But broadly, these are the roles, which are required. At some places, maybe category 1 and 2, you require more structuring expertise, more legal expertise than what you need in a category 3. But a product role, a trader role, an analyst and head of research or portfolio manager kind of role are fairly common from that perspective. In a category 1 and 2, typically, you divide, obviously the associate and analyst also remain the same. Then you also have some sort of a principal or VP or a director, which is kind of more expertise in a particular sector. He's obviously looking at deal sourcing, geographical expertise, sector expertise. Then you have a then you have a partner, essentially, who is looking at a particular firm's mandate or a firm's policy or part of the investment committee. Together with that partner, you also have a concept of operating partner. Now, our operating partner, what happens is typically, let's say, if you bought a startup which is into consumers. So typically, you as a finance function might not know how the consumer business is run. So you might want to basically hire someone who has spent 20 years in, let's say, a large Nestle or a Hindustan Lever or an ITC, and ask him to run the day-to-day operations of the company or provide the insights to those companies, so that your investment is doing well to that extent. That those kind of people are known as operating partners. So even if you have experience into a different industry, you still have a career play within AIF because they invest in those kind of startups and they are looking for people with those expertise. Investor relation is kind of a common thing, which is similar to a product / talking to investors. The fund accounting operations are typically in-house in category 1 and 2 because of the complexity, and they're outsourced in category 3 because of the ease of operations from that perspective. And then obviously you have a managing partner and a compliance function, which is similar to what you will find in other places. From a employer perspective, the challenge is, how to kind of, find out good talent. Typically, most people, who want to kind of get a job, they want you to give you a chance. They want the employer to pay them. They want the employer to train them, and then basically they want to leave that job to sort of go for a better opportunity, right? So the idea is, if I have to give a chance to someone and pay him also and train him, then why should I do all three? If I'm paying, then why should I have to train him? And if I'm giving a chance, then why do I need to pay him at all, right? So that's the classic kind of dilemma between a job seeker and a contributor. If you want to contribute to a job, I think take an internship, take a opportunity, and then prove yourself before you are worthy for getting that payment which you are required. The salary is the outcome of the efforts which you put, and the career requires essentially passion and contribution. You can't obviously simply look for getting money before you do these two things. And if you don't do these two things, then obviously the chance of getting into career is very difficult. A lot of people essentially will come and say that I have passion about a particular sector. But when you ask them questions about what the sector is doing, what kind of deals have happened, what is the sector size, they're clueless. So my point is, if you are passionate about cricket, you will follow the cricket score, you will follow the matches, you will follow World Cups. But if you're passionate about finance, if you're passionate about investing, why don't you do the same in order to prove yourself to the employer from that perspective? Being small teams, being high stakes, trust and ethics is everything. You have to be very, very careful with laws, whether it is, tradings, whether it is pre-clearances. You can't get wrong on that side. That's a non-negotiable skill within that side. Now, typically AIFs would be a buy side because they will manage money on, from a client perspective. So if you're coming from a sell side perspective, which is kind of more brokerage side, don't be very, very fixated on the title or a salary, because the title or a salary have a habit of changing very fast, than what you expect. And in a buy-side industry, in a hedge fund kind of industry, the titles are obviously very limited. You don't get manager and senior manager and chief general manager and deputy general manager. You only have analyst and associate, or at most maybe a senior analyst or a VP or something. But beyond that, don't be very, very fussy about title from that perspective. Reading research is not research. So when you are on the buy side, just don't rely on the sell side research. You have to do a lot of primary research because you are investing in companies where there is no market coverage, where nobody is covering that. So you have to obviously get your hands dirty and do as much work as you're looking to do from that perspective. Early part of our career, be obviously ready to do donkey's work, in terms of Excel modeling, spreadsheets, meeting people, negotiating, reading 1,000 pages document and going through everything, because that is something which will be required. And please differentiate between being a good analyst and being a good, portfolio manager. Not every analyst can become a fund manager, and not every fund manager need to be a good analyst. We kind of think, portfolio manager as the logical, progression for a good analyst. I mean, you look at West, a good analyst may want to remain a good analyst for a life. I mean, it's not necessary that he have to graduate to become a portfolio manager, because the qualities required for portfolio manager are very, very different from qualities required for being a good analyst. So don't confuse between the two. And everybody in India obviously wants to become a portfolio manager. Well, my friend, there are limited number of funds and limited number of AIFs and limited number of PMS houses. So, that space is already crowded. So, start with something and then eventually look for something else. And I think stick to your investment process is what I would say. I mean, as long as your process is right, I think eventually you will end up making money in markets like India. Again and again, it's a people-oriented play. Team player is what is required. So, make sure your communication and people orientation skills are right at the top with that perspective. A typical kind of associate or analyst, most people will look for some sort of a master's degree, be it an MBA, MCOM, or a CA, or a CS, or whatever you call it. A graduate by default is given. India gets mostly about 4 to 5 crore graduates a year. How different are you if you were to kind of differentiate yourself? So you need some sort of a master qualification, sort of within the parlance of getting a job. Even if you want to tomorrow become a research analyst or an investment advisor or become a principal officer or a fund manager, in any of the regulated entities, most SEBI regulations will require you to have a master's qualification, right? You need to have at least one global finance qualification, be it a CFA, be it an FRM, be it a Kaya, be it something else, whatever suits you from that perspective. But a local master's with a global is something which is must from that perspective, right? Try and not send your CV just as a blank online profile. We get thousands of them and we don't read them. Try and send your CV with some sort of work example, which is what we are looking for. We're looking for the top 3 buys, top 3 sells, which you will be selling. Apart from that, and we'll cover it in later slides, but because we are on the qualification slide, I'll mention, you will need NISM certifications, be it a portfolio manager, be it AIF, be it a compliance. Without that, there is no entry in some of these roles because these are mandated by regulations from that standpoint. Remuneration is obviously not the only thing. Your obviously payout would be a function of your AUM and the past track record. If you have a good track record, if you have good strategy out there, eventually money will come in. Salaries, most of the places, whether you are looking at salary numbers, whether it's on job portals or on your JDs, they always are rough estimates. They can never include the entire bonuses or carry structure or performance fees, and they are usually sort of changing depending on how fast you grow or how is your firm and which city you are in. So don't be very different fussy about that. A salary scale for a large firms like a KKR, Sequoia would be very different because they are very choosy in terms of finding out what they want versus the salary of a new AIF or a new fund which you're looking at, right? Most investors in AIF essentially invest in a team. They are looking for a right team and not the fund. As long as the team is right, they will make money. If the team itself is not there, then obviously they're not looking to invest with that AIF anymore. So be very clear that if you are looking to sort of join an AIF, you're looking for a long haul. You're looking for one particular cycle of taking money, raising money, making money for investors and returning money from that perspective. Category 1 and 2, I said, the talent supply is limited and hence they are very choosy with respect to what kind of talent they're looking for, what kind of operational expertise they're looking for. Essentially, they're looking for marketing skills, structuring skills, finance skills, modeling skills, people skills. Everything is required from that perspective. Whether you are from consulting background, strategy background, they're looking for people who can think out of box from that standpoint. Now, these estimates, again, I'm giving you some salary estimates, but these are based on qualitative and quantitative inputs from existing AIFs and are my estimates. So please don't hold us to account for some of these numbers. And these numbers keeps on changing, right? It depends on where you are doing and what you're doing. So a typical fresh analyst, a pre-MBA analyst, typically will get between 6 and 12 lakhs a year. I'm talking about everything about excluding bonuses. So they have a tendency of changing very fast. An associate is between 10 and 20. So please note that in a hedge fund industry, in an alternative investment fund industry, an associate is a designation above analyst. In sell-side industry, an associate is a designation below analyst, but that's not the case in hedge fund from that perspective. A principal typically gets between 30-40 plus carried interest. A partner, operating partner, again 40 to 75 plus carried interest. A managing partner is obviously 75 plus with some sort of carried interest. When I'm saying carried interest, we're talking about performance fees which you will charge in case you outperform the index, and that gets accrued usually towards the end of the term of the fund. A category 3 remuneration rate, obviously your payout will be a function of AUM and performance and past track record. Salaries are average, people invest in team. There is a good talent pool available within mutual fund, PMS or insurance available. So if you have some of those backgrounds, your chance of getting hired are faster. But you will also see that it's a question of supply and demand. So as long as you meet one of those, I think you will be able to get there. I mean, these days you have a lot of requirements for these kind of talents in Gift City, which is a new upcoming area for fund structure. And believe me, it's hard time hiring there because we don't find people over there. So if you have some of these qualifications, it will be best to try at some of those places. Again, these are my own estimates. So I've given you numbers with respect to, fund associates. It's a function of which firm you are working at, firms of where you're working. And bonuses can be 100%, 200% of your, fixed CTC. So don't even look at the fixed number from that standpoint out there. Next steps. So I think do some sort of evaluation for yourself in what skill sets you are missing. Ideally, look for certifications within alternative industry. Preferably, I think the mandatory certifications which are required in NISM. Understand the regulatory aspects of AIF, sector dynamics. Understand what categories, what's the sizes, etc., etc. Before joining a fund, look for its AUM, look for manager track record, look for a background of people involved. Please, please, please do attend relevant conferences for AIFs and webinars for upgrading your knowledge like this. There's a lot of webinars which NISM does on a variety of topics, and please do attend some of those. And start preparing work samples before applying for jobs. Don't expect that somebody will call you for an interview and then you'll prepare a work sample. You'll have to prepare your work sample and then apply for a job from that perspective. Don't worry about starting salary or profile. Just get your foot inside the door. And once that is inside the door, you can obviously work out on your salary or getting higher skill. The classic dilemma is that if you are performing, nobody will let you go. If you're not performing, nobody will keep you, right? So irrespective of what your background is, the question is whether you are adding value. And as long as you are adding value, the rest of the things are secondary. You can always kind of manage that from that perspective. A little bit of background on the examinations on alternative investment funds offered by NISM. So currently there are two specific examinations focused on AIFs. One is 19A, which is Alternative Investment Fund Category 1 and 2 Distributor Certification Examination. And the other one is 19B, which is Alternative Investment Fund Category 3 Distributor Certification Examination. Please note that the workbook of these examinations are available freely on NISM website. So you can essentially go to NISM website, log in, and on that public page, download the workbooks free of cost, and then start studying in some of those workbooks. The workbooks are designed very well. You will find a lot of knowledge within those workbooks, which will help you understand the industry, very well. There are two more examinations which are coming. These obviously we have not mentioned here, but there are two more examinations which are coming on AIF side, one on the principal officer side, and maybe one on the compliance officer side. When I say principal officer, it's the fund manager side from that perspective. The structure of the examination is very similar. Both the examinations are about 2 hours. The passing percentage is about 60. There is a negative marking of about 25%. Your certificate obviously will be valid for about 3 years. These are computer-based examinations with multiple choice questions and case-based questions available across India on centers anywhere. The examination fees is about 1,500 rupees, with GST plus GST, and it will be valid for about 3 years from that perspective. To whom the exam is relevant. So obviously, if you're working, in AIFs on sales, distributions, if you're looking for basic knowledge of AIF, if you're trying to understand AIF industry as a whole, these certifications will be very relevant to you from that perspective. You will see that majority of the requirements which we talked about in terms of skill sets, the examinations covered them in some or the other way, whether it is a regulatory environment, whether it's a taxation aspect, whether it is valuation processes, whether it is diligence processes, whether it is risk-return relationships. Those things are covered as part of curriculum within the curriculum from 19A, and similar for 19B. So 19B obviously is more focused on category 3, and hence it talks about the ecosystem, the risk management structure. It also talks about the IFSC jurisdiction which is out there, and what kind of regulatory environment is there in India from that standpoint. So I urge you to explore the workbook of these two examinations, which is available on NISM website, and then take a call from there with respect to how you want to build up those skill sets which you are looking for. Function-wise, NISM obviously offers a host of examination on product sales side, on mutual fund PMS AIF side, on advisory side, operation side, compliance and audit side. Majority of these examinations are mandatory and are required by the regulators as a minimum qualification, minimum certification requirement for entering into that field, and that can give you a better hand. So if you want to work in a sell side firm, essentially you will require to take a research analyst examination from that perspective. If you are looking to become an investment advisor, then the 10A, 10B investment advisor level 1, level 2 examinations are required. If you want to become a portfolio manager, then the portfolio manager exam is required. If you want to become a trader, then maybe a derivative or a trading exam is required. So to that extent, I think, wherever there are gaps in terms of minimum requirements, NISM is trying to fulfill those. And the good part is, the study material is available free of cost on NISM website, so you can essentially go and explore some of those. With this, I think we have come to our prepared remarks. We can take up questions from there. So I can see some questions which are already there in the chat box. I'll answer that. And while I urge our participants to add more questions in the Q&A box so that we can take up those questions. So the first question is, are there any specific qualifications one should pursue to excel in alternative investment fund? So I think the way to look at it is there are some basic requirements which can be fulfilled with certifications like NISM. Obviously, there are courses which are available out there which can help you lead there. So there are courses with respect to valuations. There are global qualifications like Chartered Alternative CAIA Chartered Alternative Investment Analyst. There's an Indian certification called AIM, Alternative Investment Manager. You obviously have the CFA, the FRM, the classic MBA Finance, those kind of models anyway available from there. Second question in terms of AIF versus PMS. Yes, AIF is a pooled product, while PMS is not a pooled product. In PMS, the trading happens on an individual basis in each individual account, or the securities are created in the accounts of demat accounts of the clients from that perspective. Because AIF is a pooled vehicle and there's a concept of commitment and drawdown, usually you will commit 1 crore and then let's say you can give it into 5 installment of 20 lakh each, which is considered as a drawdown. In PMS, the first installment or the first investment you do has to be 50 lakhs. There is no drawdown structure available. So the concept of contribution, commitment, and drawdown is only applicable to AIFs and not applicable to any other structure out there, in India from that perspective. How to get authorized to distribute AIF? So currently, the examination I told you are the best way to acquire the knowledge from an alternative investment fund industry. These are not mandatory examination at this point in time, but we expect them to become mandatory very soon. But whatever is the requirement for the firm, which is maybe a registration number from AMFI or maybe APMI, would be required apart from some of these examinations to distribute AIF. Remuneration, whether it is better than software engineers or not, it's a relative question. I mean, grass is greener on the other side of the road. I would say grass is greener where you water it. So if you do work in this industry and put in efforts, you will get remunerated for that. If you work very hard and work in your engineering space, then you will get rewarded over there. So it's always a chicken and egg in terms of when you join a certification. Maybe you join computer science because they are getting highly paid, and by the time you graduate, you realize that mechanical engineers getting highly paid. So I would say remuneration is a very relative question, but I would say if you work hard and add those skills, you will get remunerated irrespective of whichever field you are in. In terms of courses, I think the NISM examination is fairly simple. You can log in, create your profile on NISM website, which is certification portal, validate it with PAN card and photo and everything. And once profile is approved, you can pay for the course and select. And it's a self-study course. You can download the workbook or print it out, and then appear for the exam on the designated dates. Examination happens on almost all days across India, so it's fairly easy to that extent. If you want to be invested in AIF, obviously you have to have two things. One, you need to have 1 crore rupees which you can invest, and second is you need to find the right AIF which you think can deliver those returns for you. Now, trust me, AIFs are private placement products, so obviously you will not find much of an info available generically across in public domain. So you will have to obviously reach out to fund houses to find out what kind of AIFs and returns which they offer from that perspective. By passing exams for NISM, you will definitely get deeper insights into the industry than what you right now have. You will get a deeper insights into compliance functions and what kind of regulatory requirements are there for the AIFs. Once you're done with that, whether you want to start a firm or whether you want to work in a firm is your choice, which you want to have. Regarding trading, yes, trading careers are required. So each AIF will have some sort of a trader available. They will have some sort of a dealing room, and then that trader essentially will trade fixed income or equity or whatever they want to trade from that aspect out there. AIFs are definitely looking for legal and compliance roles. That's the most amount of value add you can do, in an AIF. Ideally, take up some of these examinations. Brush up your AIF skills. In terms of regulations, and apply to some of these places. Most of these people are happy to hire, interns or freshers in that role. If you have a PGP program from NISM, which specializes in the securities market, that is super helpful. If you have an LLB or a CS background or a CA background, that is also very deeply appreciated. But as long as you have the bent of mind to read regulation and analyze, I think you're good from that perspective. From a MBA standpoint, I don't know whether an MBA in a finance management is valid for the certification requirement for some of these classes. But for doing NISM certification, I don't think there is a requirement. There's a minimum requirement. You can obviously anyone can obviously do it from that perspective. If you're cleared IMF distribution certificate, I would say look at AIF examination primarily to understand more about how this works. Like I said, the exams are not yet mandated. We expect them to become mandatory sometime soon, but it will give you a perspective on what is there and how the industry works from there. The AIF companies in GIFT City. So if you go to GIFT City website, there's a regulator called IFSCA, which is International Financial Services Authority. Their website has the name of all the funds which have set up shops there, so you can find out the names of companies which are there. All of them would require obviously people to that extent. Operations is a simple aspect. I think we look forward to do the SORM, the Securities Operation Risk Management examination from NISM, and then apply in one of those AIFs to sort of work over there. That's as simple as that. How to enter into a financial services industry? It's like I told you that you are passionate about it, but what are you doing to prove that you are passionate? Do you have a certificate for passion? You don't have a certificate of passion. So you will have to obviously do something different, study more, write articles, create work samples to get in over there. Is it a difficult path? Yes, it's a difficult path. Is it doable? Yes, it's doable. Have people done it? Yes, absolutely. 100% people have done it from that perspective. AIFs do allow you to take leverage, which is invest into derivatives, maybe about, one-time leverage. So can they invest in derivatives? Yes, absolutely. They can invest in derivatives. Qualification BSc, I don't understand what that question is, so I'll skip it. You are a SEBI registered research analyst. Can you go for registration? Can you go for this exam? Absolutely. This exam is available to all of India, irrespective of whether you are regulated or not. So absolutely, please feel free to go ahead and do this exam as you require. AIF ticket size is 1 crore, PMS ticket size is 50 lakhs. So that's the difference between the ticket sizes. Is AIF demand is in non-metro city? Well, I don't have the data for it, but the amount of HNI population, I told you, it's growing faster in non-metro than in metro because of, the culture, because of, the way the economy is growing, because of the way the income disparity is there. So my sense would be that, non-metro city, the AIF, awareness might be less, but the requirement might be more from that perspective. Obviously, nobody can beat, the metro cities, but, of more and more, I would think that the non-metro guys would be more keen on doing this thing. I don't think there is a minimum age to start an AIF, so you can start or become regulated any point in time when you want from that perspective. If you are a fresher, I would suggest do NISM courses in the field which you're looking for, be it AIF, be it PMS, be it research analyst from that perspective. From a taxation perspective, if you're a long-only equity as an investor, you will end up paying the same taxes, which is 10%, 20%. In the cases in PMS, you have to pay taxes for yourself. In category 1, 2, you have to pay taxes for yourself. In category 3, the fund will pay taxes on your behalf. New AIF setup, obviously it has some requirement with respect to team, infrastructure. SEBI has a regulation called AIF regulation, which is fairly clear in terms of what all things you require to set up an AIF. What are the chances of completion? Well, there is no guaranteed job anywhere in the world. So, the only thing we can provide you is knowledge and prepare you for that opportunity out there. We can certainly not guarantee you. As regards new AIFs and registration, yes, host of new AIFs are coming every day and host of vacancies are coming. We obviously cannot guarantee any job from that perspective. Well, in order to become a fund manager in AIF, you have to manage a fund, or you have to think like a fund manager. You have to do some sort of exams out there and prove yourself, out there. You completed the derivative certificate. Well, yeah, look for AIF certificate and see how you end up doing there. I mean, if you want to become a trader, then look at some of these roles and try and apply over there. Like I said, there is no guaranteed job, which obviously we can offer. We can obviously offer you knowledge, which is out there. Operations, like I said, SORM and some of these examinations you can do out there. Demand of AIF, the industry itself has grown 10 times, so I don't think it'll grow 10 times if if it's not growing from that perspective. how can I help in setting up own business? That question I don't know. I'm assuming you're talking about setting up AIF, then definitely it is helpful from that perspective. If you have completed PMS exam, working on AIF, great. Thank you so much. Criteria for opening AIF in India, well, you need a net worth criteria. Net worth, not you need to invest in the AIF together, category 1 to 5 crores, category 3, 10 crores. You need to have people and you need to have space and the trust license to apply for that. You cleared a host of examination and, can register yourself. Well, research analyst is the separate regulation. So please clear examination 15 and then apply to become a research analyst. The individual process is fairly simple and very, very less time consuming and very, very low fees from that perspective. AIF obviously do multiple investments, but my understanding is large part of them try to generate alpha by investing in mid-market, which is less covered stocks, as I spoke already. Where can you find job vacancies related to AIF? Well, 90% of the time it will be with consultants or on the AIF website itself. What's the renewal process to NISM exam certificate? Well, appear for exam again or appear for a CPE, and that's how you renew it. Whether you are from financial background, non-financial background, like I said, there's a concept of operating partner out there. As long as you have the knowledge and the aptitude to get into this industry, I think it's easy to get in there, irrespective of whether you are an engineer or not an engineer from that perspective. A master's degree is required for majority of the qualifications, majority of the licenses which are out there. A CFA charter holder is also accepted equivalent to a master, or a chartered accountant is accepted equivalent to a master. So if you want to eventually have your own license, then you'll have to have one of those this thing. PMS distribution, AIF distribution, mutual fund distribution are similar product distribution from that perspective. Internship, yes, there are multiple AIFs which offer internships. These days you have an apprenticeship portal through which you can apply, which most of the BFSI firms use from that perspective. Operations questions we've answered. Taxation wise, there's no specific benefit per se. I mean, you end up paying the same taxes which others are paying. Bell Spectrum is the application for AIF PMS. Absolutely right. If you know it, great. If you don't know it, please try and learn it. AIF industry definitely require research analysts who is going to research the stocks, from that perspective. Tracking AIF is a little bit difficult, but I think there are some common firms like CRISIL NSE, which releases out some industry reports on benchmarking. So you can use those to sort of, look at how AIF industry is growing. AIF industry in a particular city like Kolkata, I don't know. Majority of the AIFs will have an offices in Kolkata, but if you look at the SEBI website on intermediary data, you'll find how many intermediaries are registered in Kolkata, and maybe you can go from there, from that perspective. AIF, yes, but the minimum ticket size is 1 crore, so it is targeted only for alternative investment, HNI investors from that perspective. After passing exam in MBA, can I get a job directly in AIF? Well, we hope so. We hope so you can get a job, but like I said, we are not here to guarantee anything from that perspective. AIF industry, yes, please go and apply. I think you give some exams of NISM, and majority of the exams for NISM are mandatory exam. Some exams are optional, so that details is available on NISM website. For most careers, a graduate is not enough. Postgraduate is a must-have. But if you have done graduation, if you've already been working, nothing like it without that. Whether you have strategy experience, non-strategy experience, I think there is a role available for you somewhere out there. AIF is the easier and faster growing segment, but otherwise it's out there. It may not be required to have a master's to enter into that industry, but in order to sort of bridge that salary difference at some point in time, you will need to have a master's degree. Whether you do it right now or later, that's a different story. Brokerage part, I don't know. I mean, most of them trade in liquid markets, so that they trade the same brokerage with a mutual fund or other, firms which will be paying. Well, AIF typically has category 1, 2, 3, listed, unlisted, or real estate kind of sectors are out there, and the data is available on SEBI website to see from there. Whether MBA from IGNOU is valid, I am not sure. As long as I'm sure it is approved with the UGC, I'm sure it should be valid. But that you have to find out with your legal consultant from that perspective. Remote working, freelancing, I don't think that's the option which is available in capital market, largely due to compliance reasons and security reasons. So I don't think you will find a lot of those opportunities in this industry from that perspective. The website where you can find, NISM certificate is nism.ac.in. So you will find all the certification detail over there. List of AIF, yes, it's available on SEBI website under intermediary section. You can download a list of all AIFs out there, which can be used for applying for jobs. Future of fees-based investment advising, I think it has a great future. It has just not kicked off because the number of advisors are very, very low. At some point in time, they'll increase. And, being a population of 100 crore plus, I'm sure we will find our, this thing. For certification for entering into stock market, I think NISM certificates are the best way to do it. I think there are some foundation level certificates which you can appear for. Majority of the time for a licensing requirement, if you want to become a PO, CEO or a fund manager, there will be some experience requirement and NISM and qualification. So qualification is like a master's, certification is like NISM, and then obviously you need some experience from there. Can you start in industry without experience? Certainly, yes. Will you need industry experience to become a fund manager? Yes, that's true from that perspective. AIF also is a trust format, but it's different from a real estate investment trust or an InvIT trust, which has a different licensing regime and different regulation from that perspective. So it's a trust, but it's a little bit different from that perspective. NISM, AIF examination are 19A and B that can be found on, this thing. If you're already an AIF distributor, yes, you can then appear for these examinations and enhance your knowledge from that perspective. Whether CFA, CFP course will increase, well, there are a host of different courses which give you knowledge. I would suggest go through the curriculum, see what is relevant from that perspective, and then go from there. Whether your distance learning is eligible or not, that part I'm not too sure. For all capital market entities, including AIF, the regulator is SEBI. So, that's what you need. An AIF has to be a trust or an LLP format. So obviously you can't do it in an individual, business format. Pass percentage is about 60. There is negative marking, so that you can obviously look at. If you're a BCom graduate looking for more certification, please do look for NISM. Internship options, yes, they're available. You have to apply for it. Whether this webinar is available later on, I think we are doing this webinar live at few social media channels. So I'm sure you can find this recording over there. Criteria for opening AIF essentially would include some sort of a skin in the game. People, infrastructure, it's available in AIF regulation out there on SEBI's website. If you're in insurance industry and working to do this career, yes, I would suggest do some courses which add to your valuation knowledge, modeling knowledge, and regulatory knowledge to that extent. Financial modeling is a must skill if you want to become an analyst within this thing. For AIF, the regulatory authority is SEBI and not MFI. MFI is the SRO, which regulates the distributor for mutual funds and not anyone else from that perspective. Taxation question we have already discussed. 5-year experience is required if you want to become a principal officer or a compliance officer or maybe fund manager, and not other places from that perspective. You do need to have crores. No, for investing in AIF, you need 1 crore. For starting an AIF, you need a skin in the game, which is typically for category 3, 5% or 10 crore, whichever is lower aspect. How to choose best AIF? Well, look for the manager, look for his track record, look for the strategy, understand the process, and see whether they are aligned with what you have been doing, and then go from there. My LinkedIn ID, will search for my name on LinkedIn and you will find it. How to get trust certificate? I am not familiar with trust certificates per se. Well, yeah, most AIFs look for sales people also. So please do apply for AIFs and they will find it. You cleared an NISM 5 exam. What should I do next? Well, register yourself as a distributor and start distributing. That's the only thing which you can do. If you get a job in category 1, 2, 3, can you trade derivatives? I'm sure the AIF as a regulatory intermediary will have a insider trading or a personal trading policy in place, and depending on the policy, they might allow you, they might not allow you. Yes, there is a direct plan available in AIF PMS similar to a mutual fund out there. Like I said, there is a concept of operating partner. So people from different industries, AIFs are very keen to look at those people to work as an operating partner on some of their investee companies out there. The similarity between AIF and investment trust is that all of them are trust, but governed by different regulation. Like a REIT will only invest in real estate. An infrastructure trust will only invest in infrastructure assets. An AIF can invest in listed equity, unlisted equity, or anything, from that perspective. I don't think there is an age criteria to start your own AIF or to start a career in AIF. So, as long as you are of sound mind and you are of legal age, I'm sure you can do anything with respect to that perspective. Specific master's courses, I mean, you can enroll for any master courses, which essentially gives you a edge in finance. Like I said, CFA, Kaya, FRM, some of these courses are available. NISM also runs some PG programs on specialized in securities market, which you should consider from that perspective. Financial modeling is like Excel modeling to do valuation of the stocks, to do find out NPV, IR, or some of those industries. You have to go through that. If you have a valuation experience, you will be at a super helpful in AIF industry, because they have to do mandatory valuation for all the investments every 6 months if they are unlisted. So to that extent, if you are a valuer, you have great scope in AIF industry, from that perspective. If you're a practicing CA, well, appear for exams. If you're auditing some of these clients, appear for the exams which requires regulation, from that perspective. How do you find an AIF? SEBI website has a list of all AIFs which are available. Sales side, yes, majority of the options available. Operation side, like I said, we will need some sort of proof in the pudding in terms of, whether your understanding of regulation, SORM module, like I said, security operation risk module, and some of those modules will require to be cleared. You would need, I think, like I said, in order to get to a job, you require knowledge and you require passion. And as long as you have both of the things, I think you should create some work sample and start sort of applying in some of these AIF. What's the way to find good AIF? Well, it's difficult because they are private placement products, but there are these websites called couple of these websites which collate newsletters of variety of AIFs. If you Google it out, you will find out they print out newsletters which are out there. Other than that, how to find AIFs? Yes, SEBI website has a list. You can apply there. You work as an RTA. Well, you have a great career if you want to apply for in-house operations in an AIF, and I'm sure they'll be happy to hire you from that perspective. I don't know if you're providing, NISM is providing certificate for this meeting because this is more of a webinar. You can, however, check with NISM if they are providing one of those. RTA questions we have already answered. Wealth manager AMC are using Wealth Spectrum. Yes, you're right. How is AIF? Cat2 invest mostly in listed, unlisted security. So they are kind of a middle category from those perspective. This completes our list of questions. If there are any other questions, Rajshri, we can take those. Otherwise, we can go and close the session.
There were some more questions on the chat box, but they were more or less the same kind of questions which they have asked here in the question box.
Sure.
So 2 more questions have just popped.
Tips for CFA level 1 exam. I think we are talking about NISM exams right now, but to summarize, all exams are easy to pass if you study, and they're costly to fail because you have to put in a lot of fees from that perspective. So please do study for any exams which you are giving, whether it is NISM or otherwise. Otherwise, it will be very difficult for you to justify. How to become a distributor with us? Well, please apply to become a distributor, and as long as you have a business case, we will certainly accommodate your request.
All right. So, sir, we are on time right now. It's 5 o'clock. So, sir, first of all, I would like to thank you for sharing your expertise and your knowledge. Your insights, they have been really invaluable. So, in future also, we look forward to have more such enlightening sessions from your end.
Thank you so
And
much.
at the same time, I also want to express my appreciation to each and every participant who joined us here today. And we can see the interest through all these questions that you have asked. So thank you to all the participants as well.
Thank you, Rajshri. Thank you for this opportunity. There's one more question on NISM sample paper. Those are available in your login. And like I said, study material is available on NISM website. Thank you.
Right. Okay. Thank you, everyone.
Okay. Thanks, everyone. Bye. Have a great weekend and a festive season.
Have a nice day, everyone. Thank you.